All right, so picture this. You're scrolling through the news, catching up on what's happening in Japan, and suddenly,
It hits you.
yeah, like a premonition, you get a glimpse into the future.
The future of the stock market.
The stock market. Yeah, it sounds kind of crazy, right?
Almost like something out of a movie, right?
Right.
But that's essentially what ExtractAlpha claims its new tool can do.
And they've got this white paper we're diving into today.
Packed with data.
Yeah, packed with data and analysis, all pointing to this idea that you can use news to predict stock performance. I have to admit, I was,
A little skeptical.
yeah, a little skeptical at first. Can you really just, read a bunch of news articles and suddenly know what a stock is going to do?
Right. It seems almost too good to be true.
It does.
But what makes ExtractAlpha's approach so intriguing is how they're using natural language processing.
So we're not just talking about, skimming headlines here.
No, not at all. They're analyzing massive amounts of data from a source called Nikkei Flash News.
Nikkei Flash News, now that name rings a bell. It's like, what's the Western equivalent?
Think of it as the Bloomberg of Japan.
Bloomberg of Japan. Okay, got it.
They cover everything. I mean, everything from major companies to the Bank of Japan's every move.
500 articles a day, they say?
Yeah, something like that.
Covering a huge chunk of the companies listed on major indexes.
MSCI Japan, JPX 400, you name it, they're probably covering it.
Okay, so they've got access to this fire hose of news, right? But how do they actually use it? What's the secret sauce? How do they turn, words on a page into stock market gold?
Well, they've developed two main models.
Two.
The first one focuses on sentiment analysis.
So, is the news about a company generally positive or negative?
Exactly.
Okay, that makes sense. I mean, we've seen it a million times before, right? A company gets some good press and bam, the stock price jumps up.
Right, but it's usually a short-term effect.
Short term, yeah.
Which is why they have the second model. This one's a bit more sophisticated.
This is where the AI comes in.
This is where the AI comes in. They've trained this model on years and years of historical data. Basically, they're teaching it to find correlations between what's being reported in the news.
And how the market actually reacts.
Exactly.
So they've built
a news reading AI, essentially.
News reading AI that can predict the future.
Well, predict is a strong word, but it can certainly identify trends and patterns that humans might miss.
That's still pretty incredible, though, when you think about it. So I have to ask, does it actually work?
Well, according to their backtesting,
Which, for those who don't know, is basically
simulating how the model would have performed using historical data.
Right, so it's not a guarantee, but it gives you an idea of
Its potential.
Exactly.
And the results are, I have to say, pretty impressive. We're talking a 14.4% annual return with a Sharpe ratio of 1.65.
Okay, so I'm going to stop you right there for a second. I know we've got some finance whizzes in our audience, but for the rest of us, break down that Sharpe ratio. What does that actually mean?
Sure. The Sharpe ratio is basically a measure of risk versus reward.
Okay.
A higher Sharpe ratio generally means you're getting a better return for the level of risk you're taking on.
So in this case, a 1.65 Sharpe ratio suggests that
This model isn't just throwing darts at a board.
it's making calculated bets
Precisely.
based on, news.
Based on news, which is incredible when you think about it.
It really is. But, okay, let's be realistic here. There's got to be a catch, right? I mean, no system is perfect. What are the limitations they found?
Well, one interesting thing they discovered is that the signal tends to be more accurate for smaller companies.
Really? Why is that?
They believe it's because there's generally less publicly available information on smaller companies.
So the news has a bigger impact.
Exactly.
Right.
With bigger companies, there's so much information out there already. One news article might not change things much.
It's like finding a hidden gem. The information is more valuable because it's not everywhere.
Exactly. That's a great way to put it.
So, that's pretty interesting, right? We've got this AI that's better at predicting the stock market.
Or at least identifying trends.
Yeah, identifying trends, let's say. And it's particularly good at finding those hidden gems, those smaller companies that might be poised for big things.
Which is something that, traditional analysts often miss.
Exactly, because they're so focused on big players.
Right. They're looking at the elephants, not the gazelles.
The gazelles, I like that. But, even if this news signal is amazing, let's be practical. Most of us, we're not glued to our screens 24/7 refreshing news feeds every second.
Right.
So how long does this signal actually hold up? What if I'm a day or two late in catching the news?
That's a great question. And
Am I out of luck?
Not necessarily. ExtractAlpha actually tested that.
Oh, really?
They simulated trades with delays of up to 5 days.
5 days.
Yeah, and even then,
The signal still held up?
it still held up. The returns were slightly lower, of course, but still remarkably strong.
So even if you're not like an ultra-high frequency trader making split-second decisions,
Even if you're just, checking the news once a day.
there's still an edge to be gained here.
Potentially, yes.
It's not just about speed. It's about understanding like how to interpret this new kind of information.
Exactly. It's about looking at the market through a new lens.